So today we are going to talk about private health insurance, and we have Alison and Dinesh here to do an introduction about the basic things you need to be making a decision about your health insurance, and hopefully answering some of the questions that we all might have had about health insurance, when to get it, when we need it, what the benefits are, what it means for us around tax time. All of those basics that are really handy to know. Feel free to ask some questions in the chat. Pene will be monitoring the chat, so that's Eva Pene, HCCA, putting her hand up now. We'll be monitoring the chat throughout. We can ask questions throughout the presentation, but we can also have a bit of a Q&A after. We think the presentation might go for about 40 to 50 minutes today, and the recording will be uploaded later and sent out to you if you do end up missing things or want to watch it later throughout the week. So I might hand over to Alison and Dinesh to just tell us a bit about where they've come from today and some of the topics we're going to cover, and we'll jump straight into the presentation from there.
Thank you, Darcy. So yes, we'll just briefly introduce ourselves and our organisation. I'm Alison. I come from the investigations team at the Private Health Insurance Ombudsman, which is part of the Commonwealth Ombudsman, and I've been working in the private health insurance area for many years. Dinesh?
Thanks, Alison. I'm Dinesh. I'm Senior Investigation Officer in the Industry Investigations team. We handle complaints about private health insurers and postal services operators. Thank you.
Thanks, Dinesh. Just to briefly explain the context of our office, the Commonwealth Ombudsman does deal with complaints about all sorts of government agencies, but also a number of private sectors, including private health insurance, Australia Post, overseas students, and vet student loans, amongst other things. And yeah, obviously we both work in the private health insurance area. Thank you to Darcy and Pene and the organisation for sending through some of your questions earlier. We've structured our talk around some of the recurring questions from the association, so hopefully we can cover those off. But as Darcy said, feel free to jump in with questions anytime. We're quite a small group, so we can probably make this quite conversational if people want to have a chat throughout the slides, or otherwise just save your question for the end and we're happy to answer it then. And for those who are watching on recording, feel free to send in questions to Darcy and Pene later, and we'd be happy to correspond with you by email or have a chat with you. So I'm going to start the slide, and hopefully screen sharing works beautifully. Okay. So yes, introduction to private health insurance. Thanks again for the invitation today. We're going to start with a video. If the audio doesn't work, please just give me a yell and we'll try again.
When it comes to your health, it's always good to have all the facts. So let us take a moment to look at the main differences between public and private healthcare in Australia. Public healthcare, which includes Medicare, is provided to all Australians and permanent residents. The public system provides affordable, accessible and high-quality healthcare by providing cover for medical services, such as doctors and specialists consultations, admission to public hospitals, and also subsidises some drugs under the Pharmaceutical Benefits Scheme. If you go to a public hospital as a public patient, you'll be treated free of charge by a doctor appointed by the hospital. However, depending on the treatment you need, you may have to join a waiting list. If you want to avoid public hospital waiting lists, choose your own doctor, be treated at a private hospital, or be covered for additional types of out-of-hospital treatment, you can either pay for this yourself or take out private health insurance. So why do people choose private health insurance? Private health insurance gives you more choices when it comes to your hospital treatment. To start off with, you can choose from a wider range of hospitals. You can choose the doctor you want. You can usually choose when you go to hospital for your procedure. And you can get cover for out-of-hospital extras, such as ambulance, dental care, optical, physiotherapy, and other services not covered in the public system. While private health insurance gives you more options for your healthcare, it also means there may be some extra costs you need to pay yourself. Unlike the public system, you may be charged a gap fee for your doctor's services. If you're scheduled for an admission to hospital, always ask your doctor for more information about their fees. If you're being treated for a condition which isn't fully covered on your policy, you may also have to pay for some or all of your hospital theatre and accommodation fees. If you're planning a hospital admission, always ask your health fund and the hospital about any potential expenses you may have to pay. Finally, if you need to use your hospital cover, your policy may have an excess or co-payment. An excess or co-payment is an amount you agree to pay towards the cost of hospital treatment in exchange for lower premiums. So in a nutshell, private health insurance gives you more choices with your healthcare and can help pay for the things that the public system doesn't. If you want to start looking into private health insurance, you can start by using our website privatehealth.gov.au. Use the Compare Policies tool and the standard information statements to find and compare any health insurance policy in Australia. And if you need more information about private health insurance, just call us or check out the website.
So there you go. That's private health insurance in a nutshell. Presentation is over. Not really. Oh, hang on. There we go. So yeah, in 3 minutes, that pretty much covered off the main points that we're going to discuss in this presentation. That went through it in really rapid succession, but we'll try and unpack a lot of that in more detail. As you'll have noticed in that video, there was quite a lot of information about the public healthcare system, because even though we're talking about private health insurance today, the entire system is underpinned by Medicare and what Medicare does and doesn't cover. So I'll just briefly go through the major points. I'm sure you're all familiar with Medicare, and you're aware that when you go to see the GP or you're referred to a specialist, you either get bulk billed under Medicare, which means you don't have to pay for anything out of your pocket, or you claim part of the cost back through Medicare directly. Likewise, if your doctor prescribes you a drug and that drug is listed on the pharmaceutical benefits scheme, you pay a subsidised fee, which is often much less than the true cost of the drug. And if you need to go to hospital, you're fully covered as a public patient in a public hospital. If you have an accident and you need to go, rush to the hospital in an emergency, you'll almost certainly go in as a public patient and you won't have to pay anything for your doctors or for the hospital fee. But there are some services that Medicare doesn't cover. In that example of the emergency where you're rushed off, there is no Medicare rebate for the ambulance transport. And as noted, you may have to wait for a long time if it's not an emergency. If you need to go to hospital as a public patient, it's kind of this, it doesn't cost anything, but there is not going to be a lot of choices about when you go or who treats you if it's not an emergency situation. If you do want to go to a private hospital, or you want to have a choice of a private obstetrician or surgeon or other doctor, then you do have to start looking at going into the private system, which means you either need to pay the cost yourself or you start looking at getting insurance. So just to emphasize, buying private health insurance does not take away anything from your public healthcare benefits. So you're still going to be covered for your GP visits under Medicare. You can still go to a public hospital as a public patient, even if you have private hospital cover. But what buying insurance will do is add a layer of new choices which are available to you, so that if you want to, skip that public hospital wait time for an elective surgery, or if you want to choose a specific doctor to do your surgery or to deliver your baby, you can actually go through the private system. There's also general treatment or extras cover, which will allow you to claim benefits for items that Medicare doesn't cover, like dental and ambulance. So I'll just give an example of, one common reason many people choose to buy insurance, which is starting a family. You're definitely going to be covered in a public hospital for the birth of a baby, so there's no question about whether, access is a problem, and, you can't really choose the time of the birth of baby. They're still going to admit you. But many people still make the choice to buy insurance to cover them for the start of a family so that they can have things like choosing a private obstetrician, so the same doctor who's going to treat them from the start to the end of their pregnancy, and to have the birth in a private hospital and potentially to have like a single room rather than having to share in the public hospital. So it's this trade-off. Again, you know, in the public system, you're covered under Medicare, you pay your taxes. Aside from that, there's no extra cost for the hospital fee. In the private system, you are going to have to pay for the insurance itself, but there'll be faster access and more choices available to you. You may also, like in the video, it mentioned there's sort of extra fees for doctors, which we'll go into more detail later. But yeah, that's just another thing to keep in mind. You know, you're going to be paying insurance premiums, but you may also be paying more for private doctors and surgeons in the private system. So these costs can be significant depending on the doctors you choose, but it is something that some people are willing to make that choice for, to have greater access. So I just want to note as well, you know, we're not here to advocate for one side or another. You have to just look at your own personal circumstances and decide whether you think that which side of the trade-off you want to go for. You know, not everyone's going to decide that insurance is for them. Others, having considered the information in front of them, may think that actually it will benefit me to actually go into the private system. I will note one of the questions we received before the presentation today was about private specialist fees. So I'll quickly cover that off now. So I'll just read out the email that we had from the HCCA. Is that sometimes we get questions about why private specialists like rheumatologists are not covered by any insurance given the significant fees above the Medicare rebate. So I just want to note that it is actually legislated that private health insurance doesn't pay for doctors outside of a hospital setting. And by that I mean medical fees relating to specialists, GPs, pathology, x-rays, etc. As a government agency, we're not going to speculate too much about the policy decisions behind that, but we do note that the view has been expressed that if insurers were to start paying for doctors outside of hospital, it would potentially inflate both the cost of insurance, because the money that goes into insurance needs to be paid out in the premiums, paid out in benefits to the doctors, and potentially it might cause the fees from doctors themselves to increase. So I hope that answered the question, but happy to discuss it further. Next, we are going to talk about selecting a policy, and I will hand over to Dinesh.
Thanks, Alison. So we are going to talk about selecting a policy. We move to the next slide. So types of hospital cover that are available under private health insurance. So as you see on your screen, all hospital policies are classified into one of these 4 tiers. In order to qualify for a tier, the policy has to meet the minimum requirements of that particular tier. So we are going to start at the top and we will work our way down. So a gold hospital policy will cover any kind of Medicare eligible treatment. That is, if Medicare recognizes the procedure, then a gold hospital policy will cover that particular treatment in a private hospital too. The only kinds of treatment that aren't covered on a gold policy are treatments that don't serve any medical purpose. For example, a cosmetic procedure, or surgeries which are too new or too experimental or too expensive to be recognized by Medicare yet. So this is usually the most expensive type of the hospital cover. The next one down is a silver hospital cover. So these silver hospital policies are not required to cover some of the more expensive types of hospital treatments, which are usually included on the gold cover. Some of the key items that might not be covered on a silver policy are cataracts, joint replacements, pregnancy and childbirth, and also assisted reproductive services like IVF, and also weight loss surgery and insulin pumps. Insurers, however, can choose to optionally add on one or more of these services into their silver policy. And if they do, then we call them it as a silver plus policy. But it is not considered a gold policy unless it ticks all those service boxes, which are usually applicable to gold policy. If we go further down, bronze category, then the list of the items that are not required to be included expands to heart and vascular system, lung and chest, blood-related conditions, back, neck, and spine surgery, and some other categories of treatment. Again, as was the case with the silver policy, if the insurer decides to add on one or more of those optional items, then we will call it a bronze plus policy. And finally, at the bottom, we have a basic policy, basic category, which is any type of policy that doesn't meet the minimum threshold for bronze. In the basic category, potentially all types of treatment might not be covered for a private hospital admission. This is the type of policy a consumer might choose to avoid the Medicare levy surcharge, rather than expect to claim any treatment in a hospital. So when you're choosing a policy, you have to consider what items are not included on the policy. If you want to reduce the cost of the insurance, then you have to choose not to be covered for certain items. If you need a treatment that you're not covered for, then you need to either go to a public hospital using Medicare and accept the wait time for admission, or go to a private hospital and pay for the medical procedure yourself. We suggest that it's best to review your hospital cover every few years. Many people start out on a bronze or basic policy when they're younger and just want to get started in insurance for tax reasons or just in case of an emergency. But then as you get a bit older and start thinking about starting a family, you might consider whether to upgrade and get coverage for some of those more expensive items. So that's in a nutshell of all the 4 types of hospital covers which are available. We will move on to the next slide, which talks about the general treatment, or as we call them, extras. So separate to hospital cover, you can also buy general treatment, which is also known as extras, or which is known as extras cover. You can buy this in addition to hospital cover or on its own as a standalone product. This is for the treatment that takes place outside of hospital, which is not already covered by Medicare or the pharmaceutical benefit scheme, and which isn't on the list of excluded natural therapies at the bottom of this slide, as you can see. So the most common type of treatment that are included on general treatment policies, they are listed on this slide, but the entire list of potential treatments and services is much longer. Although general treatment policies aren't divided into tiers, you can usually expect that ambulance, general dental, glasses and contact lenses, and physiotherapy are included on almost every policy. Then as you start to move into the more expensive policies, major dental and less commonly used therapies like podiatry are added on. The most expensive policies will also include items like orthodontics or hearing aids. If you look at the choices, which is Australian Consumer Association, recommendations about extra cover, they suggest that consumer work out how much they're likely to claim on services each year to see if it is worth buying an extras policy. It's more difficult to predict whether you should have hospital cover and what level it should be. The impact of your choice in taking out hospital cover is also possibly much greater because a single hospital stay can cost thousands or even tens of thousands of dollars. This is why hospital cover is regulated to have minimum benefits to provide surety to consumers who otherwise need to pay very large costs. In contrast, extra cover benefits are not highly regulated, and insurers are free to decide what benefits they will pay or not pay for treatments. This free market meant that last year only 47% of general treatment costs were paid on health insurance claims, for example, in ACT, compared to 92% of hospital treatment costs. So as it is clear from the slides that it covers ambulance, usually dental, optical, physiotherapy, chiropractic, non-PBS pharmaceuticals, and some other services. However, it doesn't include other services like Western herbalism, yoga, shiatsu, and some other services. Any questions yet on this one?
Thanks,
Okay.
Dinesh.
I'll hand over to Alison for the waiting periods.
Thank you. Yeah, and just to sum up, with the hospital cover, consider what items are not covered on the policy to assess which one is right for you. For the general treatment or extras, have a look at what it is included and maybe do a cost assessment, like how much are you putting into the cover to pay for it versus how much are you going to likely be able to claim in a year to find out whether it's suitable. All right, so we'll go on to the next section, which is waiting periods, which I understand a lot of people have questions about. When you do start a new policy or when you increase your hospital cover, you do have to complete waiting periods before you can claim benefits under the new policy. So the industry explanation for this is that waiting periods are necessary to protect policyholders, to ensure that people don't just make a large claim shortly after joining and then cancel the membership, which would result in increased premiums for all policyholders. So that sort of behaviour is usually termed like a hit and run claim. You know, you can just imagine if you join up to insurance for, let's say, 1 or 2 months, it costs you a few $100s. If you then claim, you know, a hospital stay which costs several $1,000s and then cancel, the cost of paying for that hospital stay is going to have to be picked up by other members, you know, in terms of their premiums. So it's not a sustainable thing to just keep paying large claims for short-term members. So waiting periods are in place to try and prevent that kind of behaviour. So when you join up, make sure you're fully check how you're covered for accidents. Most of the time for accidents, you're covered pretty instantaneously, but you know, you just need to check the terms and conditions. And here on the slide, you can see the maximum waiting periods for hospital benefits as set down by the government. 12 months for pre-existing conditions, 12 months for pregnancy and birth, 2 months for psychiatric palliative care and rehabilitation, and 2 months for other circumstances. Once you've gone through those maximum waiting periods, you can change insurers and you don't have to complete them again. So you're certainly not locked into one policy or locked into one insurer. You know, you can carry, like once you've done your time, you don't have to do it again. The only time you'd have to serve those waiting periods, like for a second occasion, is if you cancel your cover and rejoin later. So if there's a break in your coverage, you do need to do those waits again. Or if you're upgrading your cover to include new services, in which case you have to wait for the new services. So we'll go back to that example, like Dinesh mentioned, a lot of younger people sort of start on bronze or basic and then upgrade to a higher policy at a later stage. So if you were on a bronze policy and then you were thinking, actually, I do want to start adding cover for pregnancy or for heart surgery, you might actually, well, you will actually have to do the waiting period for that new item. You're still covered for all the things that you were covered for on the lower policy, but you have to wait for the new item. There's just a note on this slide that a 2-month waiver is possible on psychiatric once per lifetime. So there is a special exemption for psychiatric care. If you've held any level of hospital cover for at least 2 months, you can upgrade immediately to access full psychiatric benefits in hospital without having to go through the normal 2-month waiting period time. This is an emergency waiver, which only applies once per lifetime, and it's intended to help people who need to urgently access mental health treatment. I'll also note here, it says it's got a couple of lines there at the bottom about general treatment, extras, waiting periods vary. So the maximum waiting periods are only legislated on the hospital components. For the general treatment, it's up to each insurer to decide what waiting periods they apply. There are sort of industry norms about it, so you can generally expect 2 to 6 month wait periods for general dental, optical and therapies, but 12 months or more for major dental, hearing aids and other major items. If you are joining health insurance or adding on extras to your policy, a lot of the times health funds will advertise a 2 or 6 month waiver as an incentive to join. And that's great because you can often access all those general dental, optical, therapy type ones immediately without having to go through a wait period if you've got this waiver. But just be aware that even if you get that 2 and 6 month waiver, it doesn't change the longer waiting periods. So if you were joining up with the expectation that maybe I'll be able to claim my major dental item like a root canal within 6 months or immediately, that is very unlikely. You will probably still have to wait 12 months for major dental and hearing aids and other major items. So the sort of most thorny waiting period is the pre-existing conditions one. So we've gone into a bit more detail on it on this slide. It is an issue which causes a lot of complaints and which is not that well understood. So we'll go into an explanation here. So a pre-existing condition is defined by law as any ailment, illness or condition you had signs or symptoms of during the 6 months before you joined a hospital cover or upgraded to a higher hospital policy. It's a very strict rule because it's only defined on signs or symptoms. It is not necessary that you or your doctor knew what the condition was or that the condition had been diagnosed. Okay, it can still be classed as a pre-existing condition, even if you hadn't seen a doctor about it before starting the hospital cover or upgrading to a higher hospital policy. Okay, to take a very simplistic example, let's say that you trip over and stub your toe, and then a week later you start a private health insurance policy. Your toe is still hurting, so you decide to go get an x-ray, and that's when you discover it's not just like a bruise, it's actually broken and you might need a surgery of it. Even though you didn't see a doctor prior to starting the policy and you didn't get an x-ray or a diagnosis until after starting, it's still a pre-existing condition because the sign or symptom, which was that, you know, you had pain in your toe, that occurred before you started. So it is a strict rule. The decisions made by a medical practitioner appointed by the insurer, but in forming an opinion, they do have to take into account information provided by your doctor. I will note that unlike other types of insurance like car insurance, or you might have heard examples of health insurance from overseas where people have to pay more because they are more likely to claim or because they are considered a high risk claimant. Health insurance in Australia does not work like that. They are not allowed to deny you cover, even if you have pre-existing conditions, and they can't charge you more, even though you have pre-existing conditions. So regardless of your state of health or how likely you are to claim, your health insurer does allow you, they have to allow you to purchase the policy. And after you've done the wait periods, you're allowed to claim to the full extent of the policy. There's no barriers in that regard, and that's a principle called community rating. We do know it does take time to go through the assessment process. So usually, like if you need to claim, that insurer will issue you with like medical certificates. You have to go to your doctor. Doctor has to fill them out. They get sent back to the insurer. Then they get assessed. So it usually will take several days for a pre-existing condition assessment to be done. So if you're in that first 12 months of membership, make sure that you check with your insurer well before you go to hospital as a private patient to check that you're covered. Okay, because if you were to go without that confirmation and then it was later found out to be a pre-existing condition, you are responsible for the private hospital fee. Okay, if you do need to go to a hospital during the waiting period and it's an emergency, like there's just no time to go through all that paperwork, we would suggest you go as a public patient. Okay. Try to only go during that waiting period if it's a pre-planned admission where you've got plenty of time to go through this paperwork process to get confirmation. If you do dispute the outcome, like, you know, the health fund comes back and says, sorry, we're not going to cover you, it's pre-existing, we do advise you to first lodge a complaint with your insurer and ask them for more information as to their reasoning. If you then have extra information that you feel that they didn't take into account, so you might have a doctor's letter or medical records, or, you know, maybe they misread or misinterpreted what your doctor said on the certificate, you can submit that to your insurer and ask for a review. If you still aren't able to directly resolve it with your health insurer, you can take it to a third party such as our office, which can conduct an independent review. But again, just note, reviews take time. If the matter is urgent and you haven't yet been treated, we suggest that you speak to your doctor about what you should do next and whether you should just go to hospital as a public patient. Okay. Again, this is all just during the first 12 months of membership. Once you're through the first 12 months, it's usually much faster to confirm whether you're covered or not for a hospital admission. So we were also asked to talk about where you can go for reliable information about health insurance. And so one of our roles is managing privatehealth.gov.au, as mentioned in the video before. So it's Australia's leading independent source of private health insurance information. And you can use that website to compare information from every Australian insurer. You know, we're not the only source of information. We do note that a lot of consumers do use brokers and comparison websites to find health insurance policies. That's fine if that's what you're after. We just note that if you are using a broker, usually they only show products for insurers they have a commercial relationship with. So before you start comparing, we do suggest you have a look at which insurers are they actually advertising for, and make sure you're happy with that list of choices. It's not going to be every insurer in the market. It's just going to be a selection of insurers. Okay, if you do want to have a look at the entire market and every policy that's out there, our website does have information from every insurer, and it as well has like information about health insurance in general, and some information about each insurer based on our like how many complaints they got each year and that sort of thing. Okay. We are impartial, so we're not going to, like, you can go onto our website to compare policies and to find out information about more about what products are available, but we're not going to specifically guide you to a particular policy or an insurer like others can. So we're just here to give you the information so you can make an informed choice. But we do note that if you are looking for a bit more guidance than that, but you don't want to use a broker, then you can also maybe refer to Choice Magazine, who do things like best buy guides, and they do some policy comparisons as well. And all the information that we talk about in the presentation today, we've got several more slides, so don't worry about that, but all of it is also on the website. I'm going to hand back to Dinesh on going to hospital.
Thanks, Alison. So if we go to the next slide about going to hospital, so what steps you should take? So for a pre-planned admission, your specialist will usually book you into a hospital, ask your doctor for the item numbers or the description of the surgery and for the name of the hospital. And then you should contact your insurer to find out if your policy covers the treatment and the hospital. Ask your doctor for written quotes about how much you may need to pay. So they should provide you basically with a form, which is known as informed financial consent. You should agree to it before you go ahead with the treatment. And if you are in an emergency situation, we do suggest going to a public hospital as a public patient, as Alison mentioned before. That's what the public hospitals are for. However, if you go as a private patient, you do need some time to check that you are covered before going ahead with the medical admission for your medical procedure. We're going to move to the next slide. So that's an important one. The gap on medical fees, or sometimes also known as out-of-pocket costs. So when you're a private patient, each doctor that treats you may raise a fee: surgeon, anesthetist, obstetrician, assistant surgeon, pathology, and other specialists. So Medicare pays 75% of the Medicare benefit schedule fee. And if you are covered for the surgery, your insurer pays a further 25% of the Medicare benefit schedule. If your doctor charges more than MBS, then you pay the difference. This is known as the gap, or your out-of-pocket expenses. It's worthwhile to ask your doctor if they will participate in your insurer's gap cover scheme. This can reduce the gap fee for you. However, it's also useful to remember that your doctor, they do not have to actually participate in the gap cover scheme. So then you have an option of paying those gap fees, or you can look for a different specialist for your medical treatment. I'm going to hand over to Alison now for the next slides, which talks about surcharges and incentives.
Thank you, Dinesh. So far we've talked about the health-related reasons as to why you might buy insurance and how to select a policy. But there are also a number of financial reasons that you might want to consider buying insurance. The government has put in a number of surcharges and incentives to encourage you to buy health insurance. So, you know, there's sort of carrots and sticks of policy. So we'll cover the three major ones here, and I will just talk about the first one, lifetime health cover. So this is a set of rules which determines how much you pay for private hospital insurance. It is just hospital insurance. It doesn't apply to general treatment. If you have like a buy package of hospital and general treatment, it only applies to the hospital component. So it's a set of rules which is designed to encourage people to join private health insurance by the age of 31 and then to stay in insurance for as long as possible. Under the rules, the cheapest time to buy hospital cover is the 1 July following your 31st birthday. Okay, if you buy before that deadline, you can lock in lower rates for your lifetime. Okay, but if you buy after that deadline, a higher premium will apply depending on your age at the time of joining. Okay, it starts at 2% extra and can increase every year that you're without insurance. Right, so just take a few concrete examples. So if you're age 30 now, you can join at the base rates. You know, so if the policy says base rate's $100, you're just paying $100 a month. Okay, But if you were to wait till after your deadline, in that first year after your deadline, 2% loading applies. If you wait 2 years, 4% loading applies. Okay, what that means is, let's say you join at age 32, your loading will be 4% more than the base rate. So instead of $100 a month, you're paying $104 a month. Okay, so when you're in your early 30s, the loadings are quite low, and they may not have much impact on you month to month. Like it's just a small amount extra to pay. It's not a big deterrent for many people. Okay, but you have to think about this sort of as an accumulating penalty. Okay, if you start insurance at age 40, you'll be paying 20% more than somebody who started that same insurance at age 30. Okay, so you're both age 40, but your neighbor is paying 20% less than you because they've started earlier. Okay, if you wait even longer, the loading can go up to as much as 70%. Okay, so it is obviously quite a deterrent if you are you're a senior and you're trying to get into insurance for the first time. Lifetime health cover can make it quite difficult to begin. Okay. If you're buying insurance, as a general rule, it's cheaper to start at a younger age. There are some exceptions if you're a new migrant or if you've been living overseas. I won't go into the exact provisions now because they can get quite complex, but if you're interested in learning more about this, we can chat about it after the presentation. Or you can look on our website. The website does go through a number of scenarios relating to lifetime health cover. And it also has a calculator, so you can go through, enter your date of birth, enter sort of entries and exits from the country, that sort of thing, and it will give you some more information. If you do drop out of private hospital cover, okay, your loading is paused for up to 3 years. Okay, they give you a grace period of time to get back in without getting any penalty. Likewise, if you go overseas to live for an extended period of time, or you need to pause your cover because of financial hardship, your loading is also paused. Finally, if you do have loading, it does only last for 10 years. You can have your loading removed if you complete 10 years of continuous hospital cover. So in that scenario, if the person who joined at age 40, they have a 20% loading, but if they stay in the coverage until they turn 50, the loading will go down to 0. Okay, so there are some, you are able to get through the loading. I'll now hand over to Dinesh for the next incentive.
Thanks, Alison. The next slide shows some information about the government rebate. So the government rebate applies to all types of cover, including ambulance-only cover. Most people receive their rebate directly from the insurer through reduced premiums, which require them to show their Medicare number. If they choose the wrong rebate tier and claim too much or too little, there is no penalty for that. They just need to make up the difference through their annual tax return. And as you can see on the slides, the rebate is based on the household income and the age of the participant or of the member of the health fund. Okay, we'll move to the next slide. So it's about the Medicare levy surcharge. So Medicare levy surcharge applies to people earning over the MLS threshold who do not hold private health insurance. The rate of MLS varies depending on the income tier. So for example, a taxpayer earning $95,000, they have a choice of either paying $950 in additional tax to the Commonwealth government or purchasing an eligible hospital insurance policy. So if you go on our website, one of our cheapest hospital policies listed on our website from an insurer in ACT costs $1,215 a year. But the government pays a rebate of 24.68% for someone earning that amount with health insurance. So after the rebate, they would pay $911 a year. So otherwise, if they don't have the policy, they will pay $950 in additional tax to the government if they don't have a policy. However, many consumers will not choose a more expensive policy than the minimum to access the private treatments we have outlined in this presentation. So it just depends, and I think everyone should take their own decision as far as choosing the right cover is concerned. I will hand over to Alison for the last slide, which talks about the complaints as far as the medical health insurance is concerned and about the medical providers. Thanks,
Yes.
Alison.
Thank you, Dinesh. So, we've gone through all of this information in general, but as you know, sometimes problems do occur with your healthcare or with your insurance. If your complaint's about private health insurance arrangements, you can complain first to the insurer or to the healthcare provider. So if it's a private health insurance arrangement, it might be with the doctor or with the private hospital. We'd suggest that you complain to them first and attempt to resolve it with them directly. Okay, if you can't get resolution on private health insurance complaint, you can seek help from our office. Okay, if it's a complaint about the quality of care or the provision of healthcare, so it doesn't actually have anything to do with the insurance benefits, there's a couple of different organisations you could choose from. The Australian Health Practitioner Regulation Agency is one body that takes complaints about healthcare providers. And there is also in each state or territory a healthcare complaint commission. They go by slightly different names in each state. You can find all of them listed on our website as well. And as we've mentioned several times, if you just need general information about private health insurance, so any of the things we've mentioned in the talk today, there's more information in writing on privatehealth.gov.au. Okay, that's the end of the slideshow. I will attempt to stop sharing. Have I stopped?
Not just yet. Oh yeah, we're good. Thank you, Alison and Dinesh. That was really good. Just off the back of that last slide, I will also send through, we have a complaints guide that we made at the Healthcare Consumers Association, which can kind of talk you through the process of making a complaint for general healthcare quality concerns, but we'll also share the links to making a complaint through the Ombudsman as well. Did anyone have any questions? I might jump in while we're having a think, just with a couple that Penne and I have heard recently when we've been out in the community. One thing is people aren't really sure where is the best place to look for information detail in their policies. So something like if you get ambulance cover, how many times a year can you use it? Is this something that you could find through that private insurance information statement, or is this something that you could find in those trusted comparison websites? Where would be the best place to kind of find out about those sorts of details?
Yeah, the insurers are actually obligated legally to send you a private health information statement annually. So usually in either March when they're considering rate increases or in July in tax time, you should actually get something by email or in the post, which gives you, sort of one-page summary for ambulance cover, maybe a couple of pages for hospital and general treatment, and it should outline the major components of your cover. In addition to that, you can also approach your insurer directly. In the first instance, they should be able to supply you with a written outline of what you are able to claim. I also remember, Darcy, you mentioned a question we had earlier prior to the presentation, which, let me just bring up the wording, was about cover for dependents over the age of 25. So I'll just read out the question that we received prior to today. Is there an option for children with disabilities who are unable to work once they're over 25 and need to come off their parents' insurance? Okay. In principle, yes. Until a few years ago, it was only possible to cover children on your family policy up until the age of 24, I believe it was. But there was actually a change to legislation. You can now insure children up to the age of 31 as dependents on your policy. And if it's a dependent with a disability, the government has removed any age limits. However, I would say that although there is no longer any legal barrier to having children covered up to age 31 or dependents with disability with no age limit at all, there's relatively few products in the market at the moment. I think that insurers are still trying to design products and trying to test what works in the market. You can search on privatehealth.gov.au to find policies that meet that criteria, but there's not too many at the moment. And you may also want to just check with your insurer as to what options they have for dependents over the age of 25.
Thank you for that. Do we have any other questions? Gordana, did you have something?
Can you hear me now?
Yeah, we can. Yeah.
Yeah, for the oldies, you were talking very fast. I understood most of it, but there were bits and pieces that I did not understand, but it doesn't matter because you have certain time to get through it. So, but anyway, it was very useful. Thank you.
Thank you.
Okay.
And yeah,
Well,
we're happy to talk more about any aspects that you need more detail
yeah,
on.
no, I'm fine. I've learned a bit anyway. Thank you. Thank you. I just, how do I?
Perfect. Any other questions? We might finish up early if not. I'll definitely send through the links of a lot of the things we've talked about today. I'll check in with Alison and Dinesh and see if they've got any extra pages that might be useful. But we'll send that through as well as the recording in the next couple of days. But just let us know if there's any more questions you think of throughout the week, and we'll see if we can get those answered. Pene has just popped a link to an evaluation in the chat. It would be great if you have some time to fill that in. I'll also email through the link for that as well, just so we can know how to improve. But it was a really great presentation from you two today. Thank you. I think Pene and I have learned a lot of information as well that we can integrate into our own presentations. So that was really great. Thanks for coming.
Thank you for the invitation. And yes, feel free to, if you have any follow-up questions you think of later, feel free to follow up with Darcy and Penny.
Thanks, Darcy. Thanks, Penny.
Perfect. Thank you, everyone.
Thank you.
Thank you, Dinesh and Alison. Thank you very much.